Hey everyone, welcome back to my channel. It's Nasdaq with Arshia back with another video. I apologize for my voice. I've been suffering from allergies. But recently, the stock market today has been going down, down, down. Why is that? So stocks end lower, erasing earlier gains as September selling resumes. Stocks ended lower on Tuesday, which is today, to wipe out earlier gains as traders digested a new print on consumer inflation, which showed a slightly slower increase in prices last month. So the earlier move to the upside before, and like a few days ago, the Labor Department released its August Consumer Price Index, or CPI, which still showed a still heightened level of inflation across consumers and goods and services, but a pullback from recent multi-year highs. Treasury yields declined across the curve, and the benchmark 10-year notes yield hovered just over 1.3%. All right. So before we begin, I want to say I'm not a financial advisor. You should always do your own due diligence and research before you buy any investment scheme. Let's get into it. There we go. So the broadest measure of CPI grew 0.3% in August compared to July, coming in slightly below the 0.4% expected and 0.5% expected, or posted 0.5% posted last month, and by 5.3% compared to August 2020. This year-over-year measure was in line with estimates and slowed compared to July's 5.4 pace, which had in turn represented the fastest annual growth rate since 2008. The core measure of CPI, which is again, if I go up, it's Consumer Price Index, which strips out volatile food and energy prices, slowed more than expected to come at about 4% year over year in August after growing by 4.3% in July. Consensus economists were looking for CPI, excluding food and energy prices, to rise by 4.2%. Next. So just a couple of months ago, a below expectation consumer price index, or CPI, read would have probably had been a boon for all stocks. And for about an hour after the CPI release this morning, it was as a US equity futures were bid into the 9:30 open. It was really a boon for like an hour. But after equity markets began trading for the day, US stocks turned back around towards the recent lows and continue to hold there as we progress through the morning and as we progress through the day. So let's just have a look at S&P 500. So in the morning, it was like all fine, good, and then it just like rises up a few cents, falls, and then just cascades all the way down. Let's look at the Dow Jones also. We can see that like it was fine in the morning, it rose a bit, and then just cascade down. Let's also look at the Nasdaq Composite. Same exact thing, except for this one just straight fell. So yeah. But people generally say that September is the worst month for investing. Why? Why though? I want to know why they call it the worst month for investing. So why do people say September is the worst month for investing? So often, like in financial media, for whatever reason, people will make reference to specific times of the week, month, or year that typically provide bullish, bearish conditions. One of the historical realities, though, of the stock market, it's typically performed the poorest during September. So September is the month where the stock market's three leading indexes usually perform the poorest. Some have actually given a nickname as a September effect. because so many people just sell for no reason at all. So let's look at a little bit of statistics as to why this is. I'll just share my screen with you guys. And while we're waiting, please make sure to subscribe and so you don't lose me to the darkness of the YouTube algorithm. Thank you. So since 1950, the Dow Jones Industrial Average, DJIA, has averaged a decline of 0.8%, while the S&P 500 has averaged a 0.5% decline during the month of September. September effect is a market anomaly. I sound like Nemo. Unrelated to any particular market events or news. The September effect is a worldwide phenomenon. It doesn't only affect the United States. I did not know that before. I'm so absorbed in the US markets, I failed to notice anybody else, except for China. Some analysts consider the negative market effect may be attributable to seasonal behavior bias as investors make portfolio changes to cash in at summer's end. So basically, people like at the end want to cash out at the end of the summer for whatever reason. I don't know why. But investors also like make portfolio changes at summer's end, or like they'll like sell stocks because they think now is a good time, or they'll buy more, and that just creates imbalance. All right, let's look at all the other stock indexes other than the top 3, because let's just see how they were affected. Let's just see. I want to see. So Nasdaq Composite, we knew it just fell down straight, and then it rises back up again for whatever reason, and then goes back down. So now it's currently trading at $15,000 and $15,037.76. Ticker symbol is IXIK. Sorry, not IXI, IXIC. Sorry, that's IXIC. I like to remember it as IXIC, so it's easier for you if you want to remember it that way. And also Dow Jones Industrial Average, DJIA. Remember it that way. Let's look at that next. So Dow was down about 292.06 points today. Currently trading at 34,577 and 57 cents. S&P is down about 25.68 points, currently trading at 4,443. Nasdaq Composite down 67 points. Russell 2000 is down at 30.8 points. Yeah. So Arca Oil Index is also down 16.63 points. So all in all, in conclusion, today was a very tough day because of the high CPI and high inflation rate still showing, and the September effect. Things have been very complicated. And thank you guys for watching this video. I hope you enjoyed this video. If you found this information helpful, please be sure to like, comment, and subscribe. If you made it till the end of this video, if you're one of those lovely, beautiful people, thank you. Please be sure to comment powder puff below. And that's also your cue to subscribe. Thank you, and see you on the moon. Bye.